This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
Yes, indeed, everybody. It is Friday. We made it May 8th, 2026. Carol Massar, Tim Stenovec, live here at Bloomberg headquarters in New York City.
And, I say it every week. We haven't made it yet, Carol. Okay, we have 3 hours to do.
I'm going to be the optimist here on this Friday.
We're on our way to making it.
Take a look. I mean, there's enthusiasm in the markets. The S&P 500 on track for its sixth week of straight gains. What we keep hearing from investment managers, have you looked at earnings? I mean, pretty solid.
Well, look at what Bloomberg has said about the data. About 82% of the S&P 500 companies have beaten first quarter profit estimates. Mm-hmm. Stock prices following earnings are growing too quickly for investors to ignore.
Yeah, they're definitely doing it. So stocks trading at an all-time high. Oil prices backing off this week. We're going to have more on the trade for you in just a moment. Also this hour, a social media dump. Can I say it?
Say whatever you want.
A social media dump from President Trump. See what I did there? Because it really was.
It's all you, Carol Massar.
I was reading in this morning, having my cup of coffee at home, and it was just like one after another on everything from the price of oil, from the stock market run-up, to the war, to the upcoming Flag Day. I only know that because it's my brother Bill's birthday. But we're going to get to what you need to know from our own Jeff Mason. He has to keep track of all of it and really figure out for the Bloomberg audience what's important.
Yeah, and the president also is being said to have signed off on firing FDA Commissioner Marty Makary. We're going to hit that with Jeff as well in just a few minutes. Also, today's jobs report. Yes, it's a Jobs Friday. Mike McKee, he's sitting down with Austan Goolsbee, president of the Chicago Fed. We're going to have that interview for you in just a few minutes.
Matt Luzzetti is going to weigh in, too. He's chief U.S. economist over at Deutsche Bank. So a great duo to walk us through that economic report. And then we're going to get an AI makeover at 3 Mile Island. Yes, it's that 3 Mile Island. This is a great deep dive. Our Bloomberg Businessweek team, Will Wade, sitting down already at the table. We're going to talk to him all about it.
Very much looking forward to that and more over the next hour right here on Bloomberg Businessweek Daily. First up, though, a check of the day's trade and top business stories. Here he is, Charlie.
All right, I thank you very much, Tim and Carol. Happy Friday. Yes, we made it indeed. We made it to 7,400 on the S&P 500 index. The big question, are we going to close above or below that number? Keep it locked into Bloomberg Television and Radio. We'll take you right through the closing bell. 73.99 where we stand right now, up 62. That is a gain of just about 0.8%. Jobs Friday, stocks hitting a record. We've got NASDAQ, the NASDAQ 100 index, and also the S&P, all at records. Dow Industrials higher as well. Little change now, up under 0.1%. The Dow has been swinging between gains and losses, but the S&P 73.99 up by about 0.8%. The VIX at 17, 10-year 4.35%, with the 2-year currently at 3.89%, the 30-year 4.94%, and spot gold up 0.9%, 47.27 the ounce. West Texas Intermediate crude $95 a barrel, up 0.2%. Barrel of Brent $100.80 now, up by about 0.7%. Continuing to keep an eye on Intel shares, they are surging almost 15%. Intel rallying after the Wall Street Journal said the company reached a preliminary agreement with Apple to manufacture some of its chips, or some of the chips on its devices. Apple shares gaining as well, up by 1.7%, but that Intel quote bears repeating, up now by 14.9%. Cloudflare shares tumbling 22% after the company said it would slash jobs and give a forecast for revenue that fell short of analysts' expectations. Uses the ticker NET. Cloudflare right now down 22.6%. After earnings heading in the other direction, we've got Akamai up by 25.7%. So recapping, S&P at a record 73.98 right now, up by 0.8%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. Carol and Tim, that is a Bloomberg Business Flash.
All right, Charlie, thanks so much. Charlie, keeping us up to date on the trade today. We're going to try and keep you up to date on everything coming out of President Trump, especially when it comes to his social media posts. Just crossing the Bloomberg terminal, a rather in-depth post from the president. I am pleased to announce that there will be a 3-day ceasefire, May 9th, 10th, and 11th in the the war between Russia and Ukraine. The celebration in Russia is for Victory Day, but likewise in Ukraine, because they were also a big part and factor of World War II. The ceasefire will include a suspension of all kinetic activity, also a prison swap of 1,000 prisoners from each country. This request was made directly by me, and I very much appreciate its agreement by President Putin and President Zelensky. Hopefully, it is the beginning of the end of a very long, deadly, and hard-fought war. Talks are continuing on ending this major conflict. Yeah, and he kind of wraps it up here. A little bit out of left field, to say the least. We've just been sharing some images because, Tim, President Trump has been very busy. A bunch of posts this morning on everything from the Strait of Hormuz and other things. Yeah,
the U.S. war with Iran, what's going on near the Strait, oil prices coming down this week, the stock market continuing to hit new highs, upcoming Flag Day, as you mentioned earlier on June 14th. It was a lot. And then, Carol, there was yesterday's cruise. Right, down the Lincoln Memorial reflecting pool, which the President Trump, has bragged repeatedly about repainting to be American flag blue with a swimming pool-like bottom. And then there's the clock ticking, a deadline. U.S. said it expects Iran to respond to President Trump's latest proposal to end their war imminently. Secretary of State Marco Rubio giving also a comment to reporters that Iran should give an answer today. I'm so glad I don't have to keep track of it all. I'm just stammering my way through it. Who does have to keep track of it all is our own Jeff Mason. He's Bloomberg News White House correspondent, Washington correspondent as well. He joins us from the White House lawn. President's been busy today. I know he's always busy, Jeff, and I know he always drops a lot of stuff. Where should we start? What do we make of? Is this just because of that celebration that's going on over in Russia? Is that what this is about, or is there something more substantial here?
Well, first of all, Carol, it seems like you do keep track of it. You hit Truth Social posts over your morning coffee. I mean, I would...
Guilty as charged. You're really beating the charges, Carol.
It might have been 2 cups, and I was petting my dogs at the same time, I'm just going to say.
I can think of lots of other things I'd be reading instead of Truth Social posts first thing in the morning, although I am not a good example of not checking my phone for these things. Let's start with Russia. I think that is certainly newsy. It's newsy in part because, as you rightly said, it kind of came out of left field. We haven't heard a whole lot about Russia and Ukraine and any involvement in the U.S., or from the U.S. rather, in that war recently, because in large part it's just kind of taken second fiddle to the U.S. War against Iran with Israel, of course. So this is an interesting development. Whether or not it's just, according to the president, it's just connected to that Victory Day celebration. But it is the first time that I can think of in a long time in this multi-year war now that both sides have agreed to even a very, very short ceasefire. So that's significant, and who knows if it portends more, but it is certainly an interesting little piece of news on this Friday afternoon.
Jeff, we're going to do sort of rapid fire round because there's a lot to get to with you in just a short amount of time.
Put your hand on the buzzer.
So let's go from Russia back to the United States right now, because another headline crossing the Bloomberg just before we went live is that the president plans to fire the FDA head Marty Makary after some tumult at the agency. What can you tell us about what the team has reported out and really how Makary clashed at the FDA?
Yeah, interesting story that, and Bloomberg had just confirmed that. It first came out from the Wall Street Journal. He's been under some pressure. There's been some reporting for a few days that he might be on his way out, and our Bloomberg colleague confirming that the president plans to fire him, although it hasn't happened yet. So he's still, and I would just caution everyone as someone who's covered President Trump for a long time that he can change his mind pretty quickly. But at this point, it looks like he's on his way out, and he has had some clashes, you're right to say, both with industry and within the agency that apparently have led to this ousting.
So we have, and it would be significant for a few reasons. One, because this a lot less tumultuous than his first term when it comes to ousting cabinet officials, but also because it's another part of HHS, and it has to do with, Health and Human Services and the alliance that he made with Robert F. Kennedy Jr.
Yeah, indeed, and you're right to contrast the firings in the second term with the first term. There have been significantly less. Although I would say they're beginning to speed up, and I have been told, right? I mean, the first year was very. There were almost none, except for the National Security Advisor, who ended up going to the UN, and in the last few months there have been more with Pam Bondi, with former Secretary Noem, and now this gentleman as well. Yes, significant because it's at HHS. Certainly lots of intrigue at that department, with RFK Jr. leading it as the secretary, and clashes there as well.
Hey, Jeff, another day, another deadline looming for Iran at this point. President says if it doesn't happen, the attacks are going to resume. Secretary of State Marco Rubio also expecting that we get something. I mean, indeed, we are anticipating we're going to hear from Iran, or could we get another extension of sort, possibly by the White House? What intel are we getting, if any at all?
It's hard to say. I mean, certainly the signals from the White House are that they expect to get a response. The Iranians have not been clear about when that response would come, but there are talks going on, and the president said on Thursday, I think, which was yesterday, right?
Yeah.
That the previous 24 hours of talks had been successful, and yet he also said on the same day, or at least has said this week, that he would escalate attacks on Iran if they did not agree to a deal. So there have been lots of, again, you've heard me say this a million times, mixed messages from the White House and from the president about the latest on the war. But the latest, as we understand it, is that Iran is expected to come back with some kind of a response. The big question mark, of course, is whether or not they agree to the demands that President Trump has made, and whether or not President Trump ends up being satisfied, or his people end up being satisfied with essentially tabling the status of a nuclear program in Iran, which the president has said was the main reason for going into this war in the first place.
Can you table? So, would the U.S. table that, Jeff? Have a hefty presence in the region, remain until? Yeah, that's what I'm trying to understand.
Sure, and I think that's a good question. I think if we take past as prologue, the president has left a heavy force in the region, even while the ceasefire has been going on. So if they end up deciding to, first of all, agree on opening the Strait of Hormuz and extending the ceasefire for 30 days or however long to work on negotiations about the nuclear program, then, I mean, I think I can't answer that because I don't know what they would do. But if what they've done over the last several weeks is indicative of that, then likely they would remain. And that means really that even with a ceasefire, the war itself is not over. But the president has said it's over. Secretary Rubio said earlier this week that part is over. I think there are some congressional-related reasons for them using that kind of language. That is not exactly buttressed by the fact that U.S. forces remain there and essentially on high alert.
All right, Jeff, we've all seen the stroll seen around the world, and that is the driving of the motorcade through the reflecting pool, the memorial reflecting pool in D.C. I know President Trump is doing a lot of work. I assume some of this was planned ahead of our 250th birthday celebration. But having said that, between the ballroom and other things, who is paying for all of this?
Well, it depends on which project you're talking about.
Okay.
So with regard to the ballroom, the president insists that will be funded by private donors, including himself, although there is a move on Capitol Hill right now by Republicans to insert or include public money in that, and in fact a lot more public money than the $400 million that the president has said he is raising for that project. For some of the other public works projects in D.C., they are being funded by public money. As far as I know, the pond, the reflection pond, did I say that right?
Yeah.
Is getting funding from public coffers. The Kennedy Center, somewhat ironically, given how personal of an interest President Trump has taken in that performing arts center, the 2 years of renovations that it is going through is also coming from public funds. So it just kind of depends on which part we're talking about. The ballroom, though, And I think you're right to lead with that is really the president's pet project. And, of course, it is tied up a little bit in the courts right now, but it's something he really wants to get done before he leaves.
Yeah, no. And it feels like it certainly works its way into a lot of events out of the Oval Office, that's for sure. Hey, Jeff,
Yes.
Thank you as always. Jeff Mason, really appreciate it. Bloomberg News Washington and White House correspondent joining us there from the White House lawn.
Public funds, it's just another way of saying
Our money?
you and me are paying for it.
I guess I can use the ballroom for my next family party.
I guess you can. Hey,
so fine.
You mentioned one of the most read stories on the Bloomberg. It's about the 3 Mile Island's AI makeover. It's all in a Bloomberg Businessweek exclusive about the energy demand largely fueled by the AI data center build out. And yeah, it's happening not too far from here at 3 Mile Island.
Yeah, it's that 3 Mile Island. You know, remember, go back to March 28th, 1979, 36 seconds after 4 a.m., water pumps feeding the steam generators of one of 3 Mile Island's 2 reactors shut down, kicking off a series of mechanical failures and human errors that would cascade into a partial core meltdown, and the release of radioactive gases into the air. The accident was front page news around the world. Partially shut down at the time. It was fully shut down in 2019 for economic reasons, but the economic times, Tim, have certainly changed.
And that's the gist of Bloomberg's Will Wade and Drake Bennett's most recent story. An exclusive. Will is a Bloomberg News energy reporter. He joins us here in the studio. So lots of detail in here about the rebirth to nuclear. I want to start with just what happened in 1979 and that nuclear disaster here in the U.S. I was surprised to learn, reading your story, that even people who had been exposed in the area to what was released as a result of that, according to a study, really only received as much radiation as would happen in a chest X-ray. Less, actually, than a chest X-ray.
Significantly less.
Yeah.
So, obviously, it was a huge public relations disaster for the nuclear industry, and that led to all kinds of heightened oversight, new safety policies, lots of scrutiny. It really slowed down the nuclear industry in the U.S., and it was justifiably a disaster. People were terrified. Thousands and thousands of people fled the area. But when they eventually, went and studied it and measured it, the amount of radiation that was released was not deadly. It was not huge. Mm-hmm. But just the idea of radiation is terrifying to everybody. You can't see it, you can't smell it, you can't feel it, then you don't know what's happening. It's scary.
And yet, here we are in 2026, Will, and I feel like in the last couple of years, we've done nothing. I think about that NJIT event that we did, and we did a panel up at stage and what they wanted to talk about.
2022, 2023?
It's a few years.
Yeah.
Nuclear, and I think it caught us by surprise. You've been talking about it and reporting it out here. Is the whole difference just the big tech community, the AI craze, and the demand for power?
Yeah, pretty much. For a while, nuclear was really kind of waning, but mostly because it's expensive. These plants are big, they're complicated, they take a long time to build. Like I just said, there's tons of scrutiny. So they're expensive to build and operate. So until about 2019, 2020, 2022, they were just shutting down for economic reasons. They were just more expensive. You could get cheap natural gas, you get cheap wind and solar. But now we need electricity, and it's big tech, it's AI. These data centers just need so much electricity, and they want it as fast as they can get it, and they want as much as they can get, and nuclear can deliver a lot of power.
Well, you point out in the piece, this is not just about the United States. There are countries all over the world that moved away from nuclear in Europe, Japan after Fukushima, and now they've all changed their minds too.
They haven't all changed their minds. Germany is
Many of them have changed their minds. Excuse me. Thank you.
I've been tracking this for a long time. There's been a huge reversal, and people really are starting to embrace nuclear. It's, not everyone in the world, but it's really getting a lot of acceptance. And I should point out, there's 3 Mile Island, there's Chernobyl, there's Fukushima. That's it. There have been 3 major accidents.
Well, how does that compare to...
But Chernobyl was really bad.
Chernobyl was really bad. I don't want to downplay it.
It was really bad.
Fukushima was really bad.
Fukushima was really bad, but nobody died from radiation. They died from the flooding.
But Chernobyl, we've seen, that whole area, just nothing.
Yeah. That's true.
So when it goes bad, it goes bad.
When it goes bad, it goes bad big.
Yeah.
Which is why it is so heavily regulated. And we looked at some death statistics because, let's be real. Living on this planet will kill you. If you live next to a coal power plant, you're probably, more likely to get asthma. Natural gas has things. Everything is dangerous.
So then how do you quantify that danger and those dangers from burning fossil fuels to produce electricity to using nuclear energy?
There's been some studies, and they really do come down. Like coal has a lot more deaths per terawatt hour of power produced. Natural gas has more deaths. Nuclear power, even including the deaths from Chernobyl, much, much lower on the scale.
I'm going to just randomly say this, but I'm assuming you get into a car and you probably are more likely to get in an accident than a nuclear. So
that's what I mean. This planet is dangerous for us.
What I want to ask you about is Microsoft, its vast power needs, and this is kind of like the subtitle on the story and how it's bringing together two transformative and risky technologies. Will, I always get nervous when there is such demand and a rush and need for something that I wonder if people get sloppy in the development process. Now, I realize everybody's got to be careful because if there's one problem, it will shut down the industry again. Probably. Certainly
Fully
in the US.
legitimate question.
Okay, so what's going on that's risky?
That's a good question.
Yeah,
like you said, Chernobyl was indeed a catastrophe. With nuclear, I've been to several nuclear plants, and everywhere I go, it is just so carefully monitored and screened. But radiation does have, the potential to be dangerous. So you have to be careful.
Go ahead, Tim.
Well, what I noticed in your piece was that there was this idea that electricity demand had kind of peaked because we had become more efficient with energy usage. LED bulbs were, actually a part of that pre-2019. Mm-hmm. And then this happened. And by this, I mean the demand for AI. And I'm wondering about the possibility of overbuilding here, because what if it turns out that all of these technologies do become more efficient? Because that's the big bottleneck right now. So you have to think that that's what everybody is working toward, making this stuff more efficient. What happens if we overbuild here and we just shoot too far?
But then we spent a lot of money. Yeah, that's the question that we've been talking about. So, power demand in the U.S. has pretty much been flat for 20-something years. And now it's going up. The projections are insane on how much power we're going to need. There's
a chart in the show.
Projections are projections, though.
Exactly. So, here in second quarter 2026, it's not crazy higher than a year ago. But the forecast through 2030 and 2035, they are. But yeah, AI is brand new. This is a trend I've been following for about 2 years. But if they come up with a way to make it more energy efficient all of a sudden, that is a concern. And people are allocating billions and billions of dollars for power plants. And if they overspend, well, we'll see it in the stock price.
The next generation, though, just to wrap up here, we've talked about the SMRs, the small modular reactors, this kind of next generation of technologies. Right now, we're doing a lot of existing facilities, getting them up and running.
There's 3.
So how long is that? And is that going to be even more efficient, more safer? But what's the timeline?
The timeline on SMR is I'm going to go with early 2030s, maybe a couple before 2030. There's dozens of companies that are working on them. There's maybe a half dozen company I could name that are making really solid progress, and they're not that far away.
Right.
But it's going to take some time. And the first ones are not going to be cheap.
All right. So we got to be patient. Anyway, it fits into this big narrative that we keep talking about every day. It's just the spend on building out these data centers. But folks are worried about, is the supply chain there and is the energy there to actually fuel them? We'll wait. Thank you. So appreciate it.
Check out Will's story on the Bloomberg terminal and at Bloomberg.com/Big Take. Coming up in just a couple of minutes, we're going to get more on today's jobs report, views from Matt Luzzetti over at Deutsche Bank.
Let's get to that monthly jobs report. Yes, it came out at 8:30 a.m. Wall Street time, but nonetheless, it was one that caught our attention. U.S. employers, as Charlie's been pointing out throughout the day, added more jobs than expected for a second month. The unemployment rate held steady in the month of April, indicating the labor market, Tim, is holding up despite rising energy costs.
Back with us in the studio, Matt Luzzetti Luzzetti, Chief U.S. Economist at Deutsche Bank. Matt, labor market, all is good?
Yeah, there's some mixed elements of the report, but I think the headline features are all pretty positive. You had strength in payroll gains. The unemployment rate held steady. It did tick up a little bit on an unrounded basis, but there was weakness last year. I think we've moved through some of that weakness. We clearly see payroll gains that are picking up. We see payroll gains that are broadening out. It is no longer simply about the healthcare sector adding employment numbers. And all measures of labor market slack have essentially been stable for the past year or so. So I think from the Fed's perspective, this is further confirmation that there's stability emerging in the labor market.
All right, so Matt, solid payrolls report. We got data showing consumer sentiment fell in recent weeks to a fresh record low and concerns about the impact of inflation on personal finances and buying conditions. I know this isn't necessarily a scientific sample, but we talk a lot in the makeup room. It's a cross-section of people who come in, guests, obviously the folks who work there. And so many people are just talking about the high cost of things. So how do you cross a labor market that seems okay with people just feeling so lousy?
Yeah, I think this is a dichotomy that we've had for a long time now. Now it's more extreme in the sense, but you've had consumer sentiment, which is much weaker than what you would anticipate given both the labor market and consumer spending patterns that we actually see. Aggregate consumer spending has been strong over the past several years despite downbeat sentiment. And I think it reflects a few things. Number one, even though inflation has come down a little bit, prices are still very elevated, and prices are very elevated on the items that we care most about, right? So gas, energy, food prices have remained very elevated. Those things that are very visual and right front and center for most households. At the same time, you have affordability issues in things like housing. So mortgage rates are still well above where they were before the pandemic. Home prices are still very elevated. And so this typical pathway towards wealth for the U.S. consumer has really been locked out for a number of households.
It doesn't seem like everything you're saying, apart from perhaps gas prices, seems sort of baked into this economy in a way that is a political challenge for those in power, but also a challenge for us to get past it as a society. Like, we're talking, we need structural reforms and houses built everywhere for housing prices to come down. What does that do to this economy?
Yeah, on the housing side, I think you're exactly right. You need policies that will come forward and help on the supply side rather than on the demand side.
And oftentimes that's at the local level, which is a challenge.
All the time at the local level, huge challenge. I think a bigger picture, you have an economy where the Fed has cut rates over the past 2 years. Financial conditions that we look at are incredibly accommodative. The stock market's at record high levels. Yeah. Fiscal policy is adding to the economy at this point. We have the tax cuts that are working their way through the economy. And that backdrop is not one in which you would expect that inflation is actually going to moderate very much at all. And that is the backdrop that we've been working with for the past 6 years. And so as long as you are in a world where financial conditions are incredibly accommodative, right, fiscal policy is very supportive, and we are thinking about tax cuts and fiscal spending, I would expect that these concerns and worries about affordability persist.
All right, so maybe we're thinking about tax cuts. We're not thinking about Fed rate cuts. Looking at the money market, we're looking at pricing continuing to suggest the Fed will keep rates steady this year. Is the Fed likely to remain on hold, do you think, for the rest of this year?
So that's our baseline. We see the Fed on hold. And in fact, we see the Fed on hold indefinitely. We think policy is essentially at neutral at this point. I think there's an argument to be made that the Fed is actually a little bit accommodative in their policy setting. It's something that Alberto Musalem, the president of the St. Louis Fed, actually raised earlier this week. And with inflation, core PCE at 3%, the labor market stable right around the Fed's target, there is very little reason for the Fed to be cutting rates anytime soon.
The president wants to see lower rates. He has not been happy with Jay Powell.
Wait, he does?
He does.
Oh, okay.
What happens if, it's conjecture, but what happens if Warsh doesn't cut rates when he gets in there?
Yeah, I think maybe the more interesting question might be what would happen if Warsh actually did cut rates? And that, with the backdrop that we have, would not solve any of the issues around affordability, would not solve any of the issues around interest rates, because I think this is a market right now that requires that the Fed is on hold in order to keep long-end yields and inflation expectations in check. If the Fed were to come in and cut rates inappropriately in an environment where inflation is too high, growth is strong, the labor market is solid, 10-year yields would be higher than they are today. Affordability issues would be worse than they are today. Yeah. That's the pathway that I think the Fed can't afford to take.
What kind of Fed chair do you think Kevin Warsh will be? Will he be looking at the mandate? Will he be thinking about the role of the U.S. central bank globally in global markets?
Yeah, I'm not sure about the global role. I think we haven't heard that too much about that from him. I think in his testimony.
I mean it from the perspective that everybody looks at the U.S. central bank as kind of, again, the gold star, if you will.
Absolutely. I think what we heard from him in his testimony interestingly, was a focus on inflation. There was very little focus in his testimony on the labor market side of the dual mandate, which is what you might think they'd be looking at in order to cut rates over time. He will have a focus on the balance sheet. He's argued for reducing the size of the balance sheet, and that could allow for rate cuts. But that's not going to happen anytime soon. In the near term, I think we'll be focused on what does he do from central bank communications perspective. He's argued against the dot plot, argued against forward guidance, argued against data dependency as well. And so that's a little bit more of an open question, what Fed communications look like as we go ahead.
It's going to be another, the rest of the year will be interesting, no doubt. Great voice on today's news and the economic news and the Fed policy. Matt Luzzetti, Chief U.S. Economist at Deutsche Bank. Thank you so much. We're going to stay on the economy and Fed policy.
And now to the West Coast, Bloomberg and TV and radio international economics and policy correspondent Michael McKee is out there catching up on the sidelines of the Hoover Institution Monetary Policy Conference at Stanford University. That's where we find him sitting down with the president of the Chicago Fed, Austan Goolsbee.
Thanks, guys, and thank you very much, Austan, for joining us, taking time out from the conference here. Obviously, we all got up early to watch the jobs report here come out at 5:30 Pacific time. Did you basically walk away from that thinking, okay, employment's off our worry list for right now?
Yeah, for the month. I mean, it felt like a pretty stable month. The unemployment rate itself holding kind of stable, decently positive on the payroll employment growth, given the context of where we've been. So you never want to make too much of one month, but it wasn't a worry point for sure.
Well, a couple of months in a row now, we've had decent job creation and an unemployment rate that is basically stable. So is inflation the main danger right now?
I've been feeling that, as you know, Mike, I'm optimistic fundamentally. If we get some progress on inflation and we show we're headed back to a path of on our way to 2% inflation, I'm optimistic rates can go down. We just haven't been having that now for some time, and that makes me more concerned, and I'm less optimistic. We've been above the 2% Fed inflation target for 5 years, and we were at least making progress for much of that time. Last year, we stopped making progress, and the hope was the pause in progress was going to be temporary, as the tariffs increased cost one time, and then went away, that we would add now an oil shock on top of things before the other went away, so we're not really sure if or when that part's going to go away. I think, for me, makes inflation that's the topic of the moment. We got to get some clarity.
Well, then where do you stand on the bias debate? You didn't join in. You weren't a voter, so you couldn't vote to dissent. But do you support? Are you sympathetic to that idea?
Look, before I ever got to the Fed, I was always a little publicly skeptical about the value/appropriateness of using forward guidance to begin with, saying things that the committee doesn't think it's going to do X thing for some number of months, or committing itself to actions well in the future. I think that can be unwise to use at moments where we're not at the zero lower bound. When that kind of behavior really started when we're at the zero lower bound, when you can't change the rates. Now we're not in that circumstance. I usually don't get too worked up about the exact wording of the statement of this kind of form, because we don't know what the conditions are that the committee is going to be facing even at the next meeting, much less multiple meetings in the future. So let's just take a step back and take a deep breath. To the extent that incoming Chair Warsh says he wants us to think about communications in the statement, he's expressed some, not regrets, but some reservations, let's say, about the use of forward guidance. I'm pretty sympathetic with his view.
Well, as a decision by most people to leave the bias statement in as it was, basically sort of not tying the hands of the incoming chairman?
I don't know. You know the rules. I'm not allowed to. I can speak only for what I think, not for what anybody else thinks or what's behind their votes. I don't see how you can look at the current situation and, at least to me, view that the only thing that's on the table conceivably are rate cuts. Inflation's been above the target for 5 years, stalled out, progress stalled out last year. In the last 3 or 4 months, you've seen it deteriorating. The inflation rate is rising. The new data that are coming in are worse than the months before. And you're seeing it in categories where it's not supposed to be if it was just tariffs or oil prices, like core services inflation. So I'm still hopeful that that's going to prove temporary, but if we start to see a deterioration of inflation expectations and the unemployment rate and the job market look stable, I think for all credibility of the Fed, we have to be paying attention to the inflation rate when it's deteriorating and going the wrong way.
Well, let me ask you about what you think of expectations right now, because in his last press conference, Jay Powell noted that we'd had this series of supply shocks and that people were maybe getting used to the idea that inflation is normally this high.
Yeah, that's bad. I mean, if we start to see that in the data, as you know, we've got a long history in the United States and in other countries, that if people begin assuming that inflation is going to continue at higher than desired rates, it becomes a lot harder to get rid of the inflation, and it puts the central bank in a lot tougher spot.
Do you think that's what people are thinking these days?
I hope not, but in history, when the price of oil specifically, price of gasoline, very public price, when it goes up, there is a lot of consumer level expectation that responds to the price of gasoline in kind of an outsized way. So before it showed up in the data, as soon as the war began and the price of oil surged, I said I would not be surprised if we saw a significant deterioration of consumer confidence, which we then did see, and we better keep an eye on the inflation expectations, because a lot of times it has outside
lowest
impact.
Michigan numbers ever today. But if you raise rates, it's not going to open the Strait of Hormuz. It's not going to take tariffs away.
Agreed.
So is that a viable strategy at this point, or are you risking demand destruction?
Yeah, you are risking demand destruction, and you're just restating / rediscovering what makes stagflationary shocks among the worst things that a central bank has to deal with. Because if you face a negative supply shock that destroys employment and drives up prices at the same time, raising the rates doesn't solve your problem. Cutting the rates doesn't solve your problem. And leaving your rates where they are doesn't solve your problem. So the monetary framework that we passed unanimously, in it, we thought about, well, what will we do if we get shocks that are hitting both sides of the mandate at the same time? And we said, quite reasonably, we'll look at, well, which side is deviating more and how long do we think the deviation is going to last? I still think that's the reasonable way to think about it. But I would emphasize, as I say, the job market has been stable for a year and a half. The part that is deteriorating and what has moved me from optimistic about rate cuts to less optimistic is that inflation alone is getting worse. It's not even stalled out in progress. It's getting worse, whereas the job market has been stable. So I kind of think by the criteria we outlined in that framework review, we got to. it behooves us to take a serious look at what's happening on the inflation side.
Well, we assume a week from today there will be a new chairman of the Fed, and away from policy, in terms of policy making, there are changes he wants to make. Let me run through a few of them and see what you're thinking. One of the things he's concerned about is the dot plot and the SEP and the fact that everybody focuses on the median. Would you be in favor of eliminating or changing either one of those?
I could be. I mean, I'm going to be interested to see what, presuming he's confirmed as chair, I'm going to see what he proposes. I've written in past years about some dissatisfactions that I've had about the release of the dot plots and the ways in which it doesn't help to identify what the reaction function is of the committee. So I think that Kevin Warsh is going to come in with a lot of new ideas on monetary policy, on balance sheet, on communication, and those. I think it's good. Let's have some new ideas and think those through.
Well, the balance sheet, of course, is the big question. He wants to bring it down. There's a couple different ways you can do it. Do you think the balance sheet needs to be smaller? And if so, how would you go about it?
I don't know about needs to be smaller. Can be smaller. Depends in large measure how you conduct monetary policy. As you know, but in the older days up to 2008, we conducted monetary policy mostly through open market operations. Now we've shifted to the, as we call it, the ample reserves regime. We pay interest on reserves. That's a different way of doing monetary policy, and it corresponds with a bigger balance sheet than the old way. You could do it any number of ways, and like I say, it's not my position to weigh in and say I want us to do it A, B, or C direction. I'm interested in seeing what the new chair has in mind and evaluating that.
It's going to be a fun new voyage. He'll take over maybe next Friday. We'll have you back Monday to talk about how everything has changed.
That's right.
At the Fed. But hopefully we will have you back soon. Austan Goolsbee, he is the president of the Chicago Federal Reserve. Back to you.
Michael McKee, thank you so much there with the president of the Chicago Fed, Austan Goolsbee. They are right. Just wait 12 hours or 24 hours and everything can change in terms of sentiment or geopolitics. I mean, there's just so much going on.
Yeah, some headlines coming from that interview. Chicago Fed President Goolsbee is now less optimistic on disinflation progress and sympathetic with Kevin Warsh's view when it comes to Fed communications.
He also said rate cuts aren't the only thing on the table, and he's not sure that the balance sheet needs to be smaller. So there's going to be a lot coming at the Federal Reserve, as it always is, as they continue to navigate stuff coming out of the White House, stuff coming out across seas in terms of geopolitics. So, and I kind of feel like our next guest is going to dig into this. We've got one of the co-CEOs at the global wealth management firm, Vontobel. She is going to join us. She's sitting down right now, but we're going to dig into the macro, the investment environment, and I'm curious what she thinks about kind of non-U.S. entities. As we mentioned earlier, U.S. stocks hitting a record thanks to signs of labor market strength, bolstering speculation that the world's largest economy does remain resilient in the face of an energy shock that's been triggered by the war. Keep in mind that U.S. stocks and gold are on track for a fourth year of double-digit gains. That's according, Tim, to B of A strategists. So they continue to see the momentum continuing.
Joining us in the studio, Christel, Rendu, the co-CEO at Vontobel. It's a global wealth management firm. They've got approximately $240 billion Swiss francs in assets under management. That's about $308 billion US. She joins us here in the Bloomberg Businessweek studio. Do you see the momentum continuing?
That's a timing question. What I see is that the macro is very resilient, and there's no reason for the stocks to turn down for as long as we have such a resilient macro economy. We have, of course, AI is super powerful. You know, I'm starting to think that AI feels a little bit like QE. It's almost like unconditional liquidity coming to the market all the time.
QE can cause too much liquidity, can cause problems.
Exactly, and that's the conversation we want to have with our clients, is don't get lulled into it.
But that brings up a lot of questions about the association or the ramifications of increased productivity. And that has to do with fewer people. And if there are fewer people needed, then fewer people will be working. And it opens up this whole question about what that economy ends up looking like?
Yeah, absolutely. I mean, honestly, this is really still far out. So we're going to take it one after the other. For now, what we're seeing, and you can't disentangle, the normal economy with what's already coming from AI. But what you see is unemployment rates are still low. The growth is still strong. And so let's take it one at a time.
Are you talking unemployment U.S.
Unemployment U.S.
Okay.
And on this, you have to also put against the AI trend that's allegedly going to take out so many jobs, the fact that the demographics in most parts of the world, let's say of the developed world, are also pretty negative. So I'll wait and see a little bit on this one.
Christel, you guys are a global wealth management firm. You're based in Switzerland, right? And I'm just curious, I'm looking at the MSCI World Index up about 7% year to date. World Index ex-US up about 6.5%. S&P is up 8% year to date. The NASDAQ 100 is up 15% year to date. Emerging markets are up 22% year to date. I didn't even break it down in terms of European markets and so on and so forth. You can presumably look at the world. Which parts of the world do you like the most?
What I like the most? Diversification. Honestly, that is the conversation to be had.
So what is diversification from a global perspective?
So I'll tell you what is the conversation that I want to have with the clients is about 3 C's: concentration, currency, custody. And the concentration is that we have one of the largest markets in the world, the US equity market, which has a third of its valuation in 7 stocks. That's a historical high. And that trend is so powerful that you actually find it ripples into other asset classes. You have corporate debt from tech firms now. When I left managing fixed income, there was no debt from tech firms.
That's
and
right.
now there is actually quite a substantial amount.
Is that a problem, though? I mean, great. The debt markets largely seem to like it.
Yeah.
Right? Their investor interest. But I do get a little nervous. These guys have deep pockets, lots of money. I don't know.
It's not a problem per se. It's just as an investor, you don't want to have all your eggs on one theme only.
Yeah.
So pick your theme. And if I picked one, I'd pick the equity part probably for the AI because it's a growth story.
So underweight or overweight US?
Oh, what did you say?
Underweight or overweight US?
Neutral? Can I say that?
Yeah, you can say neutral.
Yeah, I'd say neutral, to be honest. I'd say neutral, but I wouldn't be underweight. So it's a neutral positive. So are you then skewed, because I know what you said about market concentration here in the U.S., but you like the AI play. So are you skewed, though, towards those big tech names? This is not, in a sense, I mean, it's a very hard call to be made. I think what I'm skewed toward is saying the macro theme is real.
Okay.
You don't want to concentrate around that.
Oh, okay.
And this is precisely the conversation we're having with the clients, is where do you express that view, how much, and what other asset classes, other geographies, other currencies you want to hold. Because ultimately, remember, the key call for your wealth is how you allocate across assets, geographies, etc. It's the most underrated call.
Even with the decline of energy prices that we've seen in the past few days, oil is still up more than 65% this year. Could that derail what you view as a resilient macro environment?
It could if it lasts long enough. And I don't know. You're going to ask me how long is too long. Yeah. I don't know either.
We'll know
what that is.
But
we'll see it.
In Europe, certainly in Asia, to this conflict that was started by the U.S. and Israel, they are feeling the pain more than we are.
Yes, that's true in terms of the energy dependency.
Yeah.
I would say the consumer headlines might actually be stronger in the US because of the tank, price at the tank, which is always a very sensitive topic in the US. But yes, you're right. And the longer it lasts, the more it will have an impact on the economy.
Is there another market that you like, though? I am curious. Like, we've talked a lot about defense spending that seems to be increasing throughout Europe and other places. You like it. It's very clear you do like the U.S. market, but you're kind of neutral.
I like the fixed incomes as well, to be honest, because I didn't buy that argument in 2022. This is the end of 60-40. I think it was just I
feel like it never goes away, even though people talk about it.
No, it was a nice reminder that rates can go up, and in that period when you cool the economy, everything goes down at the same time. It doesn't mean you want to do without. And the other part that I like is can you do something with the volatility in the market? And I think you can.
I think we have to run.
We got to run.
Hope you're back soon. We would love to continue this. A really good conversation. Christel, thank you so much.
My pleasure.
Rendu de Lint. She is, of course, co-CEO at Vontobel. It is a global wealth management based in Switzerland, but she found her way. She's spending New York this week. She's heading home soon, but glad she made a stop with us.
Hey, we are just a little over an hour away from the close of equity trading on this Friday afternoon. The Dow is down by about 0.1%. The S&P 500 right now up by 0.7%. That's more than 54 points to the upside.
But on track for another
6th week in a row.
Week of gains for the S&P 500.
Yeah.
All right, folks, we're counting you down. This is Bloomberg.
This is Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec on Bloomberg Radio and Television.
I think we need a Stocks on the Move theme.
We don't need one if you have that song.
Stocks on the Move.
If we hit record on this, if there's tape in these cameras,
That was so lame.
then we're good. We're golden.
There must be something. Yeah.
That's not really in my.
You want to do it like FM stereo?
No, I'm good. You are doing enough for both of us.
I'm in such a Friday mood. What a week. What a week. All right, we're getting ready to wrap up on this Jobs Friday. Still have an hour to go in terms of the trading session. In terms of the equity markets, just pulling it up, we're looking at, we've seen another record on Wall Street on this Friday. And so we continue to see, we're coming off our best levels of the session, still up about 53.7% higher. But man, the tech trade today, the NASDAQ 100 is up almost 600 points, up more than 2%. You take a look at something like semiconductors, Tim, they are just flying. Almost every of the 30 names in the SOX, I think there's 28 out of 30 are higher today.
The SOX up more than 5% right now. Only 3 names lower in there.
Oh, 3, okay.
Microchip Technology, TSMC, and Entegris Inc. But you have Micron up almost 15%. You've got Intel higher by 14%. AMD up by almost 10%.
I know.
Wow.
It's up about 60% since the end of March, the SOX. Wow. More than 60%. Yeah. Yeah, I wish I had all my money in semiconductors. I don't.
I'm Tim Stenovec. I'm Tim Stenovec along with Carol Massar. Let's take a look at some stocks on the move today. With us is Bloomberg News cross-asset reporter Denitsa Tsekova here in the studio with us. Hey, Denitsa.
Hi there. Let's talk about high-flying stocks, and we have to talk about Dell. It's not quite the fundamental reason you're expecting, but the stock is up more than 12% today. Year-to-date gain is more than 100%. This is kind of insane. Of course, today we've seen some movements based on the news we're coming from the White House. The president said, go out and buy a Dell. He has said that a couple of times. He said it in February.
God, I didn't see it.
They actually shares went higher because the president said,
the shares was already
go and
up,
buy a Dell.
And then there was a big boost. He said it again in February.
Yeah, after this is because of the
go out and buy a Dell computer.
The donations that the Dell family has made.
Of course, Dell family is behind
the philanthropy.
One of the big backers of the Trump account, so they've received a lot of support. They're donating $250 for 25 million Americans, which is more than $6 billion. Obviously, impressive investment. Of course, the company is on a tear. We're seeing a big driver in surging demand for AI servers, data centers, infrastructure. We saw the last earnings reports was really impressive. They exceeded estimates, so they've been on a tear. They have all those deals with CoreWeave and Scale, kind of all the big names, so they've been on the center of that. But it's funny that we're seeing a spike on that headline.
Well, I'm going back to what you said back in February. February 19th, the president said, go out and buy a Dell computer. And then today he said, go out and buy Dell computers.
Yeah.
He said almost the exact same thing.
He loves the Dell computer.
Dude, you're getting a Dell.
Dude, you're getting a Dell.
Yeah.
Dude, you're getting a rally in Dell today.
Yeah. Are we getting anywhere with Airbnb today?
Airbnb is an interesting one. We're seeing a boost there, but much smaller one. Stock was up about 2%. The ticker, of course, is ABNB. It's kind of nice, positive outlook in travel, which we really haven't seen. We saw from airlines, United Airlines, American Airlines, Booking, all those companies cutting their forecasts. What we're seeing from Airbnb is they actually boosted its annual forecast on robust bookings. Like we talked a lot about the World Cup. They said they've seen 100,000 new apartments being listed. They're doing all those new fancy things. Like, there are markets where Airbnb is not allowed, so they work with boutique hotels and they found their niche to offer it. They offer other deliveries, they offer tours. Like, they've expanded a lot beyond what is the short-term rental, and that's paying off. They're doing okay. I mean, they're up just 5% year to date, but some boost today.
Interesting seeing the guidance there, but because Expedia came out and said tepid gross bookings for the second quarter, analysts pointed to these macroeconomic pressures weighing on the guidance. So a little difference between Expedia and Airbnb.
For sure. A little bit of a gap there, but definitely some relief for the travel sector. They say they're seeing really strong markets in the US, Canada, Mexico.
All right, let's go to DraftKings, ticker DKNG. Stock was up almost 8% at its highs today. It's still higher, but not as much as it was earlier.
Yeah, we saw some of those gains fade, but definitely this has been some relief for DraftKings. They've been under a lot of pressure. There is this whole competition between sportsbook and prediction markets, and sportsbooks have been on the losing end. DraftKings is actually down 25% this year. What we see today is actually some good outlook. The company reported revenue that rose 17%. It beat estimates. We saw a pretty good reaction. Adjusted earnings before interest, taxes, and depreciation rose 64%. So a lot of those key numbers investors are looking at look pretty good. They said they're boosting their investments in prediction market. That said,
it's going to all meld into one.
It's all melding into one.
How could it not, right?
But we saw FanDuel, we saw DraftKings. Both of those companies are trying to get into prediction market, but they are really so far falling behind the main players. So it's an interesting competition of they're obviously big on sportsbook. They're trying to enter the space, but they're still very new entrants and are not getting a significant market share. But that said, they're investing a lot of money.
All right, good stuff. That's three great stocks. Definitely moving around in today's session. Denitsa, thank you so much. Denitsa Tsekova, she's Bloomberg News cross-asset reporter here in studio. Check out our Stock Movers podcast, 5-minute episodes, big winners and losers in the stock market. Find it wherever you get your podcasts.